Hello CA Foundation students, I hope you have watched our previous revision videos and your revision is going on with full focus. We have already covered some parts of the Companies Act 2013 in part A of our revision video. I hope you have watched it. We have covered the basics of a company, the features of company, along with it the corporate wheel theory, lifting of corporate wheel, and all the classes of companies under the Companies Act are covered in that video. In part B of this revision video, we are going to cover incorporation procedure of the company. Along with that, the theory questions like types of share capital, the kinds of share capital and the classification of share capital. And for the doctrines, we are going to look into it in another separate video. So today's video, we will have registration procedure, the memory techniques for MoA and AoA, all the contents of Memorandum of Association and theory question on Articles of Association. That will also be covered in this video. Coming to the topic, we will first look into the theory question of classification of capital. But before that, you need to know what is the meaning of share. So what is a share? When a member wants to invest, when a person wants to invest in a company and become member of that company, he will buy the shares. What does it mean when he buys the share of a company? That means he has bought an interest in the respective company, and that means he is now going to get certain rights and obligations in the company, right? So what does our module say? Share means a share in the share capital of a company. एक बड़ा सा शेयर कैपिटल है, and in it what part of the capital you are purchasing, that is the share that you have purchased, right? And it includes a stock, that is a group of shares. So section 2 clause 84 of the Companies Act says share means a share in the share capital of a company, and it includes stock. Another few things which you should know, and maybe a theory question can be asked on it. Share is an interest in the company. As we saw, the rights and obligations which are attached to a share are those which are prescribed by the MoA and AoA of the company, and the shareholder has the contractual rights against the company. Along with it, he also has certain rights which are given by the Companies Act. Which rights? Say for example, right to dividend, right to participate in the voting of certain decisions, right? So those are the rights given by the Companies Act. That is all about shares, and certain things like shares are movable property, and the transferring of the share will be done in the manner provided in the articles of the company. Shares shall be numbered, so every share will have a distinctive number. Coming to kinds of share capital. So section 43 of the Act says the kinds of share capital are equity share capital and preference share capital. Now equity share capital means what? They have said it means all the share capital which is not preference share capital. So we need to look into the definition of preference share capital. Preference share capital means that part of the issued share capital. Preference share capital means that part of the issued share capital which carries preferential right. Now the preferential right can be with respect to dividend, or it can and it also includes the preferential right with respect to repayment of capital. Okay, so you have to repeat after me so that this revision is fruitful for you. What is equity share capital? It means all the share capital which is not preference share capital. And what does preference share capital means? It means that part of the issued share capital which has preferential right with respect to dividend and with respect to repayment of capital. What does that mean? Preference with respect to payment of dividend means preference shares will get a fixed amount of dividend, or they can get a fixed percentage of the dividend, right? And they will get preference in the repayment of capital in the case of winding up of the company. So whose capital will be paid before equity share capital? Preference shareholders' capital will be paid before equity share capital holders. And this repayment, it is with respect to capital. For the repayment of premium, if the preference share capital is to be repaid with premium, then that premium might or might not get preference, but the preference is with respect to repayment of capital in case of winding up, right? Equity share capital now can be with voting rights, with normal voting rights, one share equal to one vote for the shareholder, or it can be with differential voting rights or differential rights as to dividend. That means it can be like one share equal to 10 votes. So such equity share capital can also be there. Okay, so that is a theory question on kinds of share capital. Clear? Now coming to classification of share capital. Classification of share capital. nominal, issued or authorized capital, which is mentioned in the memorandum. Then comes issued share capital, then is the subscribed capital, called up and paid up capital. Very easy. Why is it called registered capital? Because it is the capital with which the memorandum of the company is registered. Why is it called authorized capital? Because that is the capital which the company is allowed to raise during the lifetime, which it is authorized to raise during its lifetime. So it is such capital which is authorized by the memorandum to be the maximum amount of share capital of the company, with which this is the capital with which it is to be registered, being the maximum amount which it is authorized to raise by issuing shares, and upon which it pays the stamp duty. So on which amount does the company pay stamp duty? On which type of capital? It is the nominal, authorized or registered capital which is liable for stamp duty. It is usually fixed. How is it decided? It is usually fixed at the amount which it is estimated the company will need, including the working capital and the reserve capital, if any. So this is decided, the authorized capital is decided basis estimation of the requirement of working capital that will be needed for the company and the reserve capital, if any. Now what is reserve capital? It is usually that capital which is used only when the company goes into liquidation, right? So did not go into the details, but I am just giving you meaning of few terms which might confuse you. Okay, this is an exam oriented video, so we will keep it light and not a detailed explanation video, because it should help you one day before exam to quickly cover all the topics. Coming to issued capital, I hope you now remember what is authorized, nominal or registered capital. Coming to issued capital, it is that capital which the company issues from time to time for subscription. It is a part of authorized capital. Say my authorized capital is 10 lakh, out of which now I want to issue only 5 lakhs. So 5 lakhs become issued capital, which is offered by the company for subscription, and it includes the shares which are allotted for consideration other than cash. Say for example, one of the member has contributed to machinery. He has purchased a machinery and given to the company, and in exchange of the machinery, the company has allotted him shares. So that is consideration other than cash. What is the consideration for the company? The machinery. So this value of machinery will also be included in the share capital. Schedule 3, important point. Schedule 3, what is Schedule 3? The format of balance sheet and profit and loss account of a company. It makes it obligatory. Schedule 3 makes a company obligatory to disclose issued capital in the balance sheet. So the balance sheet has to mandatorily disclose what? Issued share capital. Coming to subscribed capital. Now whatever is issued, say 5 lakh is issued, it is not necessary that the 5 lakh will be subscribed. So that part of the capital which is subscribed by the public, that means the public has promised to pay to the company, that is the subscribed capital. It is such part of the capital which is for the time being subscribed by the members of the company. Now an important point comes, we have seen the 3 types. What? 3 classification: authorized or registered or nominal, issued and subscribed. Now Companies Act says wherever any notice, advertisement is issued by the company, sometimes as per the act the company has to issue a notice or advertisement, and if in that advertisement the authorized capital is mentioned, then in the same manner, same conspicuous characters, that means equally visible characters, the company has to mention subscribed and paid up capital. Paid up we are going to see now. Okay, so this is an important point. If the authorized capital is issued is noted on any document, then the subscribed and paid up, because authorized is a big number, but the public wants to know, right, what is the subscribed, and in that what is the paid up amount. Paid up means what? The amount which is actually paid by the public, by the members of the company. So authorized, subscribed and paid up capital will have to be mentioned in equally conspicuous character. If there is a default, every officer and the company who is in default, a default in this regard will make the company and every officer liable to pay penalty extending to 10,000 for company and 5,000 for every officer. Now what is called up capital? From the subscribed capital, say now I am calling only, say if the share is of rupees 10, I am calling only 7 rupees now. So that is the called up amount. Such part of the capital which has been called for payment, it is the total amount called up on the shares issued. Paid up capital means total amount paid or credited. Now out of the called up capital, whatever is actually paid, that is called paid up capital, because some of the amount might still be pending from the shareholders and it is called as calls in arrears. So whatever is the called up amount less the calls in arrears, that will be paid up capital. So paid up capital is the total amount paid or credited on the shares issued. It is equal to called up capital less calls in arrears. So I hope this is all clear. Now coming to a direct theory question which can come about procedure for registration. A long theory is given and we are going to make it precise. What is the procedure of registration? First, coming to meaning of promoter. Now quickly, who is a promoter? The one who conceives the idea of forming a company, but this is a very general term. What does the Companies Act say? Promoter means a person who has been named as such in the prospectus. What is a prospectus? The document which is issued at the time of issuing of capital. When an IPO comes, you must have heard that a prospectus is issued. So the person who is named as promoter in the prospectus, or who is named as a promoter in the annual return, or who has control over the affairs of the company. Now that control can be as a shareholder, as a director or an employee, or however, that does not matter, or in whose accordance with whose directions the board of directors is accustomed to act. Clear? That is the definition of promoter. Now before going into the procedure, we should know basic two things according to which the company can be incorporated. For forming a company, section 3 says there are two basic requirements. First, the company can be formed only for a lawful business purpose, and second, the number of members requirement. So for public company, the minimum number of members are 7, for private 2, and for one person company 1. So in respect of all the companies, these minimum members will subscribe the memorandum, they will sign the memorandum and articles, after which the company can be incorporated. Now where is the incorporation procedure given? Section 7. So section 7 provides for procedure to be followed for incorporation. Coming to the procedure. Now the procedure says that you will need to file certain information, certain documents and certain declaration with the ROC, that is registrar. Which ROC? Where the registered office of the company is proposed to be situated. Once the ROC checks all these documents and registers them, then the ROC will issue a certificate of incorporation in which a corporate identity number will be allotted to the company, and once it is incorporated, that is a evidence that the company is now become a body corporate. After this, we will see if the company was formed by giving false information or incorrect information or suppressing material information, then what will be the consequence? Now it can happen that when the procedure was followed before incorporation only, the ROC came to know that the information is suppressed or it is incorrect, or the company can be incorporated and afterwards it came to the knowledge that the information was false or incorrect, and we will look into the consequences. So filing of document and information. Following documents are filed with the registrar within whose jurisdiction the registered office of the company is proposed to be situated. First, what is to be filed is the memorandum and articles which are to be signed by all the subscribers to the memorandum. All the subscribers have to sign both the documents. Then few declarations will be required. First declaration is to be given by a person who is engaged in the formation of the company. Like say I am a chartered accountant, say kya main to hu chartered accountant. So if someone 2-3 people come to me and they say that we want to incorporate a company, then I will guide them with respect to what is the procedure to be followed, right? So that person is the person who is engaged in the formation of the company, like an advocate, a CA, cost accountant, or a company secretary. So this declaration has to be given by 2 people. This person, the professional who is engaged in the formation of the company, and the person named as first directors in the articles, director, manager और secretary जो भी रहेगा, they will have to give this declaration. What declaration? That all the requirements of this act and the rules in respect of registration of the company have been complied with. All the procedure, all the regulations given under the act for incorporation of the company, we have complied that procedure. This declaration has to be given by the professional who is engaged in the formation of the company and the person like director who is mentioned in the article. Okay. Another declaration has to be given again by two people, each of the subscriber of the memorandum and the person named as first directors. These two category of people have to give a declaration of three things. First, they are not convicted of any offense. कौन सा ऑफेंस? कोई भी? नो, एनी ऑफेंस इन रिलेशन टू प्रमोशन, फॉर्मेशन और मैनेजमेंट ऑफ एनी कंपनी. प्रमोशन, फॉर्मेशन, मैनेजमेंट ऑफ कंपनी के रिलेटेड कोई भी ऑफेंस में हम लोग कन्विक्टेड नहीं है. दैट इज वी हैव नॉट बीन डिक्लेयर्ड गिल्टी और वी हैव नॉट बीन फाउंड गिल्टी ऑफ एनी फ्रॉड, मिसफीजेंस और ब्रीच ऑफ ड्यूटी. ब्रीच ऑफ ड्यूटी, फ्रॉड, मिसफीजेंस नहीं हुआ है इन रिलेशन टू एनी कंपनी अंडर दिस एक्ट और अंडर प्रीवियस कंपनी लॉ ड्यूरिंग द लास्ट 5 years. ओके, along with that ये भी होना चाहिए, ये भी होना चाहिए. Any of these three things, if it has happened, then you cannot give this declaration, right? And the last thing, that all the documents which we are filing for registration with the registrar, they contain information that is correct and complete and true to the best of knowledge and belief. Okay, so this declaration, what? Not convicted of any offense in connection with promotion, formation or management of any company, or not found guilty of any fraud, misfeasance or breach of duty in relation to any company incorporated under this act or under previous law during the last 5 years. And along with that, all the documents which are filed are true, complete and having correct information to the best of our knowledge and belief. This declaration has to be given by all the subscribers and the first directors. Two declarations we saw. Along with this, we need one more thing from the directors. Particulars of interest of the persons mentioned in the article as first directors. Particulars of interest in what? If this person who is the first director, if he has interest, that is if he is in any way involved in other firms, partnership firms or body corporate, then he has to give that particulars, this information. Along with that, he has to give a consent to act as director of this company. Okay, so two declaration we saw, documents we saw, MoA, AoA. In this documents list, add one more thing, consent to act as first directors by the persons named as first directors in the articles. They also have to give particulars of interest in other firms and body corporates. Along with that, you will need this information. What? Address for correspondence till the registered office is established. Till your registered office is established, where should the Ministry of Corporate Affairs send you any documents if required, right? Then the particulars of every subscriber and particulars of every first director. Here there is a mistake. You should the subscriber details are given here and the director's detail are given here. What details? Like your name, family name, residential address, nationality, along with proof of identity. And in case of directors, one additional thing, along with the name, surname, residential address, nationality, you have to give your director identification number. Okay, all this information will be given and you will see in the end they have given. This information is now given in a form which is named as SPICE. The name of the form is SPICE. The form number is INC 32 SPICE Plus. It is simplified pro forma for incorporating company electronically. So this form along with all the documents which we have seen now, this will be filed with the registrar. Who is the registrar? It comes under the Ministry of Corporate Affairs, right? So this information will be filed with the registrar. Then the registrar will issue a certificate of incorporation on the basis of information filed, and he will issue a certificate of incorporation in which the registrar shall allot to the company a corporate identity number. This is the third point. This every document which we have filed with which the company is registered, it has to be maintained. The copy of these documents have to be maintained. All the information as originally filed has to be maintained at the registered office of the company till the dissolution of the company. Okay. If the company is incorporated or at the time of incorporation, if it is found that false or incorrect information was submitted or there was separation of material fact, then any person any person who has given this false information or declaration, he will be liable for action under for fraud under section 447. So section 447 of the Companies Act is a section which mentions about the penalty for fraud. So any person who is found that he is giving false information and this is found at the time of incorporation, then that person will be liable for action under 447. And if the company is already incorporated, now if the company is incorporated and post incorporation, if it is found that there was something incorrect information or false information or suppression of material information, then not only that person but additional people will also be responsible. So the only difference between these 2 points is, in above case it is that person, and here the promoters, the first directors, persons making declaration will also be liable for fraud under section 447. Along with that, company के साथ भी कुछ होगा. The company will be also liable as per the directions of tribunal. The tribunal may, if the situation so warrants, pass such orders as it thinks fit. Which orders? The order can be for regulation of management of the company, including changes. It can ask for changes, if any, in the memorandum and articles. So tribunal, that is the court for which the companies are, like the court which comes under MCA. They will ask the company to make any changes in the memorandum and articles. So they will pass such orders which they think fit for the regulation of management of the company, including changes, if any, in the MoA and AoA, and that will be done in public interest or whichever is, or whatever it is beneficial for the company and the members and the creditors of the company. Or along with this order, they can also do another thing. They can direct that liability of the members be unlimited, or they can direct removal of name of the company from the register of members, or they can pass an order for winding up or any such order which the NCLT thinks fit. But before passing any order, they will give a reasonable opportunity of being heard to the company, and they will take into consideration the transactions which are already entered into by the company with any creditors or any liabilities which the company has entered into. So that is about section 7 incorporation procedure. Now once section 7, that is incorporation procedure, is complete, a company is incorporated, what is the effect of registration? So section 9 says about the effect of registration of a company. So once the company is incorporated, the subscribers to the memorandum become members of the company. These people will now be called members of the company, and these members now together become a body corporate which has perpetual succession. That is the effect of registration given under section 9. Along with that, few case laws also mention the same thing. From the date of incorporation, which is mentioned in the certificate, company becomes a legal person separate from the incorporators. And there comes into existence a binding contract between the company and its members, as evidenced by the memorandum and articles of the association. So once the company is incorporated, there comes into existence a binding contract between the company and the members. And what is the contract? That you have to follow all the rules which are given in the articles or the memorandum. A company may purchase. Now this is all what happens when a company is incorporated. All these case laws are based on the same thing. A company may purchase shares of another company. However, merely because the company purchases all shares of another company, it does not mean that it is putting an end to corporate character of another company, and each company is a separate legal person. All these things we have already seen in the features of company. Along with that, a few points which are mentioning about twist of facts. The mere fact that entire share capital has been contributed by central government and all the shares are held by the president and other officers of the central government, it does not make any difference in the position of registered company, and it does not make any company agent of the president or the central government. एक बार पढ़ लो, छोड़ दो, ठीक है? As per section 10, क्योंकि अगर क्वेश्चन आ गया, you can easily write it. Now section 9 हो गया. Section 10 क्या बोलता है? Once the articles and memorandum are registered, there comes a binding contract between the company as well as the members. Section 10 says, where the memorandum and articles are registered, it shall bind the company and the members. An agreement to observe all the provisions of the memorandum and of the articles. Now it is duty of the company as well as it is the duty of the members to observe all the provisions which are given in the memorandum and articles. all the monies payable by any member to the company under the memorandum or articles now become a debt due to the company from the member. That is about incorporation procedure as well as section 9 and 10. Now what we are going to cover next is memorandum of association, and I have a beautiful way to make you remember all the theory related to memorandum of association. Basic thing, what is a memorandum? It is the constitution, it is the basis on which company is incorporated. Why? Because it contains the object clause of the company, right? The very existence, why the company was incorporated, that is mentioned in object clause. Memorandum of Association is also called Charter of the company. It defines its constitution, scope of powers of the company. I have already prepared a YouTube shorts for this, and within 3 minutes it beautifully I have covered all the theory which is given from this page till this page. Till here I have almost covered till here. Okay, so you can even check it out. I am again covering, I have also given a memory technique there. I am just mentioning the memory technique and quickly covering the topic. Okay, you can watch this video, the link will be displayed. Two things we need to know when we discuss about memorandum. First, what is memorandum? We have already discussed. Why is MoA important? That is object of registering the MoA. And section 4, that is what is actually the content of MoA, what is written in the MoA, right? I have a memory technique to remember everything related to MoA, and that is my Roloc. What is my Roloc? M means everything about the memorandum, the basic things, like it is the charter of the company, it defines powers and objectives of the company, it is the constitution of the company, etc. Then R means the object, R का क्या लिखा है मैंने, हाँ, R means the objective of registering the memorandum. Why is memorandum required to be registered? Why is it important to register? Because it contains the object for which the company is formed. It enables the shareholders, creditors who deal with the company to know that what are the powers of the company and what activities the company can engage in. The shareholders also know that their money is used for which purpose and what risk are they taking with their investment. And memorandum is a public document, so it is presumed that every person dealing with the company should have knowledge of the memorandum, and that is why it is necessary to register the memorandum so that others can then see it. That is about R. O is object clause and ultra vires transaction. So they mention that a company cannot depart from the provisions contained in the memorandum. Whatever is written in the memorandum, if the company engages in any activity which is outside the object clause of the memorandum, then such a transaction is called ultra vires transaction. We will again discuss in detail in the ultra vires topic. Ultra vires transaction hoga and it will be void. Coming to L. L means legal forms. The different types of companies have forms which are given by the Companies Act for preparing the memorandum. Schedule 1 of the Companies Act has 10 forms, 5 are for the memorandum and 5 are for the articles. So the company can follow that form if it is a company limited by shares, company limited by guarantee. Different types of companies have the different forms which are mentioned here, table A to table E. By following those forms, the company can be incorporated and it can make its memorandum following those forms. Coming to O. O means only 6 clauses. What are the 6 clauses? Object clause, and you should know what has to be written specifically for each clause, right? Content of the memorandum, name clause, simple, you can write it, registered office clause, object clause, liability clause, capital clause, association clause, and in case of one person company, the subscriber clause or nominee clause. Okay. And L, my Roloc. C means some compulsory details which you should remember about the memorandum. That is, the memorandum must be printed, divided into paragraphs which are numbered consecutively, and it should be signed by at least 7 persons in case of a public company, and 2 persons in case of a private company, and 1 person in case of a 1 person company. And this has to be done in the presence of at least 1 witness. 1 witness has to be there, right? So that is about the memorandum. Along with that, few points which you should remember is the above clauses which we have discussed, 6 clauses, they are called compulsory clauses or conditions. A company being a legal person can through its agent subscribe to the memorandum, right? A company can invest in shares of another company, but a minor cannot invest in shares of a company because he is not competent to contract. If a guardian enters on the behalf of the minor, the guardian will be personally liable. One important thing which is discussed here is Memorandum of Association cannot contain anything contrary to the Companies Act. So if there is anything contrary between MoA and Companies Act, who will win? Companies Act. If there is anything contrary between Articles and Companies Act, who will win? Companies Act. If there is anything contrary between MoA and AoA, who is going to win? MoA is going to win, right? That is about Memorandum of Association. We have done this in an exam oriented way. Don't expect a detailed explanation because that is not what you do one day before exam, right? Now coming to last topic of today's video, Articles of Association. Articles of Association के लिए पहले कुछ बेसिक चीजें देखते हैं and again I have a mnemonic for you to remember the contents of the articles, right? Articles of Association means rules and regulations which are framed to manage internal affairs of the company. They are the internal regulations of the company. They are in fact bylaws of the company according to which director and other officers are required to perform their respective functions, and the management of the company works according to the regulations given in the articles. Even the auditor should study the articles so that he knows the provisions and accordingly he audits the accounts of the company. Section 5. Section 4 किसका था? Contents of MoA. Section 5 is contents of articles and the model form for articles. A to E table was given for MoA. Likewise, table F to table J is given for forms of articles. Now, what is the mnemonic you should remember for all these points? Real form. Real form is the content of Articles of Association. What does R mean? Regulations. Articles of a company shall contain the regulations for management of the company. Simple point. What is E? E means articles can contain entrenchment provisions. Now, I will quickly try to explain you what does entrenchment provision mean here. Articles may contain provision for entrenchment. Entrenchment means to protect something. That means to make something more strict. Now, simple, what is relevant here is that I will explain you. For amending the articles, for changing any point in the articles, the shareholders have to pass a special resolution. Okay. Now, we want to make this more strict. What? The amending of the articles, any point, we have to make it more strict. We have to make an entrenchment provision for certain point. Can we do so? Yes. What is the requirement? How we will do that? We will look into. But can we do so? Can we make amending of the article stricter? Yes. So wherever special resolution is required, we can mention that special resolution means what? At least 75% of the votes have to be in favor compared to the votes which are given against the resolution, right? Entrenchment provision means we will make it stricter than 75%. Okay, that is simply entrenchment provision. So the articles can contain entrenchment provision to the effect that specific provisions may be altered only if conditions or procedure more restrictive than special resolution, that is more restrictive than 75%, are met or complied with. So say ये हमारा articles है, इसमें 1, 2, 3 point है. This third point we want to mention that this can be altered only if 80% of the votes are in favor. That means we have done an we have mentioned this, that means this is a entrenchment provision. Okay, that is E. R was regulations, E is entrenchment provisions. A means what? कहाँ लिखा है मैंने A का? हाँ, additional matters. So whatever is given in the form, can the articles have additional matters? Yes. Articles can also, the company can also include in the articles such additional matters as it considers necessary for its management. What is L? L is the legal procedure for entrenchment provision. How can you include an entrenchment provision? So at the time of incorporation also it can be done, and after incorporation also it can be done. The provision for entrenchment shall only be made either on formation of a company or afterwards by an amendment in the articles. But afterwards, if you have to amend the articles, then all the members of the company, if it is a private company, all the members of the company have to agree to such amendment, and in case of a public company, a special resolution has to be passed if entrenchment provisions are to be included. that is about real regulations, entrenchment provisions, additional matters, and the legal procedure for entrenchment. Coming to form, what is F? Forms of articles. The articles of a company shall be in respective forms which are specified in table F to table J of schedule 1 as may be applicable to such company depending on the type of company. So that is form. O means official notice to the registrar for entrenchment provision. If you want to include entrenchment provision in the articles, then whether on formation or afterwards by amendment, the company has to give notice to the registrar of such provision, such entrenchment provision. So form, official notice to the registrar of entrenchment provision. R means regulations. So a company, whatever is the model form, a company may adopt all or any of the regulations contained in the model articles applicable to such company. So it is not necessary that you use all the regulations which are given in the model forms. If you want to specifically delete any provision, you will have to mention that this provision is not applicable to our company. That is about model forms. So FORM, regulations, whatever you want to mention, you will mention, otherwise you can delete it. And M stands for, M कहाँ पे गया? M. हाँ. Model forms apply unless a specific point is excluded or changed. So as I mentioned that unless you specifically mention that you do not want to apply this provision, the model form will be applicable. And what is this last point? It states that if any company was incorporated before Companies Act 2013, it need not follow the Companies Act 2013 and change its articles. But further, if it is doing any change in amendment in the articles, then the Companies Act 2013 has to be followed, and accordingly the amendment in the articles has to be made. So I hope you remember the mnemonic and all the relevant points, and you have also understood the entrenchment provision. Now a last topic which remains is key differences between MoA and AoA. Simple, at least 4 differences you can remember. MoA defines objectives of the company. Articles define internal regulations and how the objectives are to be achieved. Relationship. MoA defines the relationship of company with outsiders. Articles define the relationship of company and the members because regulations are given. Alteration of MoA is difficult because it can be done only in the circumstances given in the Act, but articles amendment can be done simply by passing a special resolution. Ultra vires transaction, if a transaction is done against a memorandum, the transaction is null and void. It cannot be ratified even by consent of all the shareholders. But if a transaction is done ultra vires the articles, it can be ratified by a special resolution of the shareholders, provided it is not beyond the provision of memorandum, right? So as I mentioned, if AoA and MoA collide, AoA will always win, right? So that is what they have given, that if AoA के against में अगर कुछ हुआ है, AoA, if the act is done against AoA, the special resolution can be passed by the shareholders and the act can be ratified. But if it is against MoA, then it cannot be ratified. Okay, so that is the difference between. I hope you have understood everything what I have explained in brief about these topics: incorporation procedure, kinds of share capital, classification of capital, MoA and AoA. See you in the next video wherein we will cover the remaining topics, that is all the doctrines. All the best for your next revision video.